Happy Monday, traders. It's 8:02 a.m. Chicago time on July 6, 2020. This is episode number 1790. Hopefully, you can hear me nice and clear, not too loud, not too soft. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. And today we have risk on. The market is pushing higher. This was expected from last week, as you recall, as we push through the 3100. The key target above is 3160-ish, and then we close the gap and start moving in the 3180s, where the upper balance is 3189.50 to be specific in the ES. We'll cover that in a minute. Um, this morning, the Russell leading the pack. The Russell 2000s trading at 1464.2, up 31.5 points, 2.2%, and followed by the Euro Stocks 50 out of Europe and the DAX out of Germany. The DAX is up 227 points, or 1.82%. The laggard today is the U.S. dollar, taking a bit of a hit, down 64.5 cents, or 0.66. The bonds are also off 24 ticks, and crude is above 40. Finally, trading at 40.58, down 7 cents. So all in all, the market's allocating to risk. The gold, interestingly, is at 1795.90, up $5.90, or 0.33% on decent volume. So that's where we stand this morning. The gap, the settlement to the current in the S&P is plus 41 points, or 1.31%. Pretty decent gap to the close of Friday, which resulted in a dip. It's not too far from the external gap, which is the gap zone at 3156.50. So a few things to go over this morning. There was a little bit of kind of psychology, trader wisdom stuff that I wanted to share with you, but I don't think I'll have time, unfortunately, this morning. So let's hop right in. And of course, Friday was a holiday here in the U.S. I removed that data, as I always do. Um, it's not useful since the markets were closed. The underlying markets are closed. So my data is not going to contain Friday's information. What is the primary expectation on Friday? If you recall, I was looking for a push through 50, 3150 here. The overnight high is this blue line. Expected that to be taken out. Remember, I said there's likely to be a flush through the 50. Earlier in the video, let me see. I showed you what the book looked like. Here, see this right there? That liquidity, the market had moved up on NFP and is drifting up into that liquidity. And what I had indicated is we are likely to take this liquidity out, flush it out, and then we would likely to see exhaustion and a reversion back. And that was the plan for Friday. So let's get back to where we were. Again, not Friday, Thursday. Let's get back to where we were. Again, here was the plan set out pre-market on Thursday before the open, and we expect a push to above 3150. We expect a flush up there on the liquidity, and then we're looking for an impulse down. That's what that little arrow indicates, an impulse down and a push into 3132-ish as a potential key area to test. I expected this box here with the X indicates an open gap zone. I expected the gap zone to hold. In other words, I expected the market not to get into 3117.75. That was incorrect, but our key target was from above 50 down into 32-ish, 3132-ish, and then we're looking for a bounce. Here's what actually happened on Friday. Let's remove today's stock zones. This is Friday's action right here. We have a clear open auction. Looked a little bit-ish like an open test drive higher, but it wasn't. It was an open auction. So we had a nice opening swing from 40.50 to 53, pull back through the mid, continuation into 56. Now remember, this is where I expected the flush right here at 31.50. That was the liquidity I just showed you. And as soon as it gets done with the liquidity, it gets exhausted and pulls right back. Pretty decent pullback there, 7 points or so, 6 points. And so it continues higher, tries again for the continuation at 56.50, and this is the impulse I was talking about. That's the little arrow you saw right back down into 32, which is right here. This 32.50, this naked point of control. Thursday, Thursday, Thursday instead of Friday. I keep saying Friday, but it's Thursday. Friday I wasn't here. So we have this responsive selling, and then from here, the expectation is it likely will consolidate in this area since it's a naked point of control, and then bounce back up, which did not happen. We ended up pushing all the way down to 19.25, missing the 17.75 by a point and a half, pulling all the way back. This was a beautiful retest here since we had impulse, small pullback, new impulse, and then we pull back to mid, and then this mid short, mid right on the dot here. Mid is this blue line, talk about the mid all the time, pulls back to this 72-ish, 72.50 area, puts in a low of 28 and grinds itself back up. But pretty decent opportunity here from the mid at 38 down to 28 for 10 points or a little bit under 10 points on that. And then pushes back up to the open before we sell off on the close. So we expect to sell off on the close. Why? Because it's a long weekend, Independence Day weekend here in the US, and a lot to digest. Pulls back to the mid of the impulse. This was a decent impulse with good volume, good delta on the way down, and you can see that the bounce up did not have much positive delta in it. So this looked like it is likely to kind of linger here through Sunday, reopen Sunday somewhere in the range, and then test the low is what it looked like. But that's not what we got because the overnight session. Here's what's happened since the open. The overnight session shows us opening where we closed. Again, I skipped Friday's data. We removed it. We opened where we closed. We opened just below where we closed, right at the low, and we have been just driving one directionally all the way through to the European Open right in here, and since then we've been stable. There is a clear excess. There is a clear excess below Friday's high, so 56.50. The 56.50 area and down, there's an excess right here, excess, X, okay? So the market propelled itself very quickly higher. This looks like short covering action. Once the market is done with the squeeze, what it does is it balances out, and what we have is the point of control near highs and a lot of consolidation near that high. So as we push higher, we're likely to see some pretty persistent continuation on the buy side, in my opinion. So that's how we're set up. Look at this point of control, very, very sharp, high kurtosis or high compression in that volume within this tight range. We want to keep an eye in the 57, 56, 50 area. Very important this morning. If it comes back down underneath here, it is likely to move very quickly to 50, 43-ish, 41-ish from Thursday and into and below the mid of the overnight session. We don't have balance in the overnight session, and volume is okay at 292,000. So pay attention. This is relatively meaningful. The delta is positive, and the overnight inventory is almost 100% long. So there may be a little bit of a pullback. Just keep keep an eye on 57.56. 57.56, if that holds, then we are likely to squeeze. And again, the target is 31.8950. 31.8950 is the next equilibrium point or balance zone. Let's take a look at what I mean by that by looking at the composite. So if we take the composite, and here's that high at 32.20. If we take the composite and we put a profile on it from the gap all the way through, you could see that 3100 area is pretty important, right? There's quite a bit of volume up in here. Then we had a small peak right in the 38, 37 area, 3650 here. And then we cleared this low volume zone, which is what we're in, between 45 and 58. That was the old gap. We cleared this area, and then what is the next acceptance price up high? It's that. So if I crunch this microcomposite back down and just look at that area, you'll see 3189.50 as the point of control. So see right here, it says POC is 3189.50, and that's the key target above currently. Okay, so that's where we stand this morning. If I go even further back, we can see that there are multiple areas of acceptance down below. 3,000, 3,030, 3048, 3104, and then 3189. This is a pretty active price discovery zone. Again, this is an RTH only chart of daily chart of the ES. Each bar represents one pit session from 9:30 a.m. Eastern till 4:15, and this is in line with the underlying equities. And it's telling us the big picture. And the big picture is we have come into the big point of control here, and we have wiggled around it a little bit, broke higher, broke the most recent high, pulled back in, and now we're higher than that. So I expect some reversion this morning, a consolidation, and a continuation 3189.50. That's how things are shaping up. That's what the narrative is saying. But again, my goal is not to forecast what the market is going to do, even though I might sound certain to you. I have no idea, and nobody knows unless you have big money behind you. There's nobody who knows what the market will actually do. But we're looking at tendencies and likelihoods in terms of what is easier for the market to achieve. Currently, it's easier for the market to keep squeezing higher given the way it has built up its profile. So again, high kurtosis near the top, the point of control is near highs, the overnight point of control at 31.65, and we're holding steady. So we have acceptance at these higher prices currently, and as long as it stays above Friday's high down here at 56.5, 57, as long as it stays above, it is likely to squeeze right through this liquidity above us, and we're likely to keep pushing 3189.50. Does that make sense? So this is the liquidity picture overnight. Quite blank underneath, of course, until this fund or whatever it is shows up. Look at this thing. Just a wall right at that yellow line. There's a wall of liquidity that comes in. You know, there's a point in the day where somebody flips on that machine. It's at 6 a.m. exactly. At 6 a.m. exactly, we have a machine that kicks on that is bidding and offering the market. It all looks like it comes in at the same time. When I remove this yellow line, you'll see that there's a clear distinction. This is a big player, a big house that is in the ES and is offering up a lot of the liquidity that's in here. We could see it hopping from approximately 88 bid to 103. So these are 20 lots coming in here? Yep, all 20 lots coming in here, all throughout the book. 20 lot, 20 lot. That's what's going across that line. Okay. So we are in rally mode. We are in rally mode, and the market is really pushing higher. And so look for continued squeeze. Why fight the trend? Okay. Again, this is CT Bookmap. You can find this at ctbookmap.pro. Let's take a look at what's expected for today. Again, the idea behind this exercise is not to try to forecast or lock you into a specific bias, but the goal is whatever happens, whatever is likely to happen, we have a plan for, and we're able to hold steady when the market is playing out. That's the hardest thing for traders is, they see what they're supposed to do, but it's very, very difficult to hold on, right? It's one thing to create a plan, it's another to trade it. So the gray bands that you see here are stock zone areas. This is again brought to you by edgeclear.com. Edgeclear is a brokerage that I started in April. We just passed our 3rd month anniversary with a group of brokers that have had that are award winning, and hopefully you have checked this out. Again, you can find us at edgeclear.com. Here's the deal. Okay. The expectation here, because we are squeezed between the overnight high and this high volume node in the overnight session and the point of control, and so the expectation is an open auction that pushes down, that attempts to flush lower, and I expect that it's likely to test into the prior range a little bit before it finds ground and consolidates and then starts squeezing the other way. I expect it to push through to 3180 from about 3155 or 54 or so, up to 3180 on its way. This is Monday after non-farm payrolls. Let's really temper our expectations. Not only that, but we have it's a Monday in the middle of summer after non-farm payrolls. So the odds are against big movement today, but the market's been pretty actively discovering price, has been pretty actively trading on both sides, and so we're not going to put it past it. So what's going to happen here is the market responds when we open, as the market pulls back, we're going to be paying very particular attention to the order flow. Let me see if I can show you this. Right here. Going to be paying very particular attention to the order flow and how the move up is likely to be treated. So as you can see here, there was a move up. This is an example overnight. There's a move up here in the volume scope, and we see that it was followed by delta, and the pullback did not get much play. So the expectation is the next couple of bars are likely to be inside bars, and it continues higher. That's the expectation. When it doesn't, it tells us that there's likely some weakness. And so as it comes back up, it creates this opportunity for some delta divergence and a scalp short, a potential scalp short back into the overnight point of control. And so it's likely to pull back in to the prior day's range, 3156.50, the prior day's range high, before it bounces back up. That's where that whole idea comes from. So the expectation here, the primary expectation is an open auction that responds, comes into 56.50 or so, and then turns back over and pushes the overnight high rather than the overnight low for that stat to 3180 and consolidates in the middle. This is likely to be a slow, lazy day given the context of the summer and the day after non-farm payrolls. All right, let's wrap this up. The secondary is an immediate response down, an impulse up, consolidates at 3189. The response down is very weak, so the impulse is likely to continue, and we actually managed to get 3189.50 today as the market is a little bit euphoric with this rally. And then that leaves us with the third scenario, which is to drop back into the range. Scenario 3 is a test of the overnight high, impulse down, brings us back into the 3143.50, and then we have a valid value area here. Sorry, I'm losing my voice. And then we come back to 3135 as the point of control or thereabouts before it actually bounces. So these are the three key scenarios. Just remember, if you happen to catch, if you haven't catch the impulse, the pullback on the impulse or the turn, you know that the targets below are 3143.50, 3135, and then beneath there you have 3120, 3130. Those are the key areas below, and then the key areas above are at 3180 and 3189.50. Okay, so hang in there. In my opinion, hang in there. Once you've taken a commitment and you've put your money at risk through your stop, why cut yourself short? Let the market kind of do its thing. Good luck today. Take care.